In yesterday's video, we talked about the importance of this key zone for Bitcoin and look at how the price has reacted. Does this mean we're out of danger? Meanwhile, MicroStrategy has entered what appears to be a trap zone. Is this trap confirmed? What insights can we gather from this high-volume node on Ethereum? And why could this information be crucial today for understanding how the markets will move? All of this is what we'll be analyzing in today's video. On screen, we have the MicroStrategy chart on the 1-hour time frame. As we can see, the price has lost this structure that we consider so important. It's none other than the trend line of our bullish zone. Now, why is this trend line so critical? Because if it's definitively broken, it could signal the start of a bearish move. But let's not despair just yet. The break hasn't been confirmed. We could still be seeing a bear trap. Why? Look at the size of this structure and compare it to the current size of what appears, for now, to be a trap. So all is not lost. We can give this setup more room to develop, which might allow for a recovery and a continuation of the upward trend. To understand this, however, interpreting the Ethereum chart will be key. Now, let's look at Ethereum's chart on the hourly time frame. What does it show us? Notice that with the break of this wedge, we've seen a bearish impulse. After that move, we're now observing a pause, and toward the end of this pause, we can see price compression forming. So what are we evaluating here? We're evaluating that after this bearish impulse and its pause, the price might attempt to give us a bearish replica. But here, we're going to be watching for it to fail. Why are we expecting it to fail? Take a look at this high volume node marked with the blue rectangle. This high volume node will act as a defense, creating a barrier right here. If this bearish replica attempt fails, it could give us enough momentum to break above higher structures. But hold on, things aren't all smooth sailing. What happens if this structure, this high volume node, is lost? If this structure breaks, we'd be expecting the price to continue falling with strength. How far? Let's analyze. Here's the original bearish impulse, and we'd expect the bearish replica to follow. Now, notice where this bearish replica could land. See this dotted line? Let's zoom out a bit to understand what it represents. This dotted line here is none other than the trend line of this entire corrective pattern. Remember, we're looking at the original bearish impulse followed by a complex corrective pattern, which created this bullish C structure. This C also gave us the wedge in its subsequent break. So what does all this mean? When the Z of a complex corrective pattern collapses and breaks its trend line, the price doesn't have the obligation, but it does tend to seek out the trend line of the corrected pattern. So the price will tend to move toward this point. But as I said, it's not obligated to do so. In this case, this structure will act as our protection and will indicate whether the price is likely to follow this tendency and head toward the trend line, or if, on the contrary, this zone will defend us and push the price back into its bullish path. Now, how will this information help us with other assets? This is where cross-analysis becomes key. Let's move on to analyze Binance BNB. But before that,
welcome to Crypto Insight, your ethical and moral channel for cryptocurrency technical analysis. Here, we really know what we're talking about. We conduct advanced technical analysis that has been developed for over 12 years. We upload videos several times a week. If you're enjoying what you're seeing, let me know and leave a comment with your opinion. Like the video, subscribe to the channel, and click on the bell so you don't miss the next opportunity.
On screen, we have the Binance chart, which we're analyzing on the 4-hour time frame. What do we see here? We have two trend lines, a macro trend line and a micro trend line. How can Ethereum help us in this case to analyze and better understand Binance's chart? Let's take a closer look. Here we have two trend lines, the macro and the micro. At Crypto Insight, what we're expecting is for Binance to respect this micro trend line and continue its upward movement, breaking past this defense zone. Of course, the price could give us a trap below this structure. But what happens if this trap doesn't recover? If the price fails to reclaim the level, that's when we'll need to see what Ethereum is doing. If we see that Ethereum has lost the high volume node we were analyzing, what we'll interpret is that beam could easily drop down to this macro trend line before continuing its upward movement. Now, let's take a look at Solana, also on its 4-hour chart. Remember, we've recently broken a structure and retested it. Let's zoom out a bit to see this more clearly. Here's the structure, a reaccumulation, and the retest after the break occurred along this creek that we've marked here. Following that, we saw an automatic reaction. Zooming back in, we can see that the break of this structure occurred with a Z, which also gave us a wedge and a breakout. This eventually led to the formation of a distribution process. So what do we have here? We have sellers defending this zone. How do we know? We can see it clearly with this defense zone we've marked here, a zone we're closely watching for a potential breakout to the upside. Therefore, we remain optimistic, expecting this defense zone to eventually break. However, before that happens, the price could still give us some declines. How far could these declines go? It's possible for the price to retest this creek we just mentioned. This creek belongs to the macro reaccumulation and could serve as a springboard for the price to continue its upward trajectory. Once again, Ethereum and cross-analysis will be helpful here. Depending on on where Ethereum's price is, whether it's falling or holding the zones we've identified, we can better understand what might happen if this zone is lost and the price re-enters here. In that case, the price could give us a minor trap below this structure. So if we see a trap here, we don't need to lose all hope. Instead, we should observe what Ethereum and the rest of the assets are doing to properly assess this movement as a trap while waiting for its recovery. Cardano, on the other hand, after its strong rallies, has also entered a distribution process, and notice how the same dynamic repeats itself. Once again, we see all the sellers defending this zone. So what are we expecting? That's right, we're expecting this defense zone to break to the upside. In other words, for these sellers to stop defending this area. But just as we've noted that prices can fall in other assets, they can also fall in Cardano. How far could they drop? Well, we have several possibilities here, and observing how other assets are moving will help us assess this. Now, look at this dotted line. Let's zoom out to understand where this structure originates. What do we see here? We have a macro accumulation process and its creep. This dotted line represents the creep. So what happens if Ethereum gives us that bearish replica and falls a bit more? In Cardano, this could easily translate into a revisit of the breakout origin, which wouldn't put us in a danger zone. Therefore, while we don't expect the price to fall that far and anticipate a swift recovery, we shouldn't be alarmed if the price reaches this level. It would simply be recognizing a critical macro structure. From here, we'd expect a strong reaction back to the upside. Now, let's move on to analyze Bitcoin. We also have the chart here on the 4-hour time frame. This trend line here, the same one we analyzed yesterday, is what we consider to be extremely important. It's telling us that not all is lost and that we can still look upward across the entire crypto ecosystem. Why? Because this is the trend line of the bullish Z, and as long as it's not broken, we'll continue to focus on the upside. What else do we have here? Well, we see this bearish impulse that resulted from the wedge breakout. Following this impulse, we're expecting a complex corrective pattern that could break through this defense zone to the upside. So yes, we remain optimistic. As long as this trend line holds, we maintain a positive outlook. Now, let's combine this information with what we've seen about Ethereum. What's happening with Ethereum, and how can it help us here? Ethereum can help us understand the possibility of a trap below this structure. Yes, a trap is possible, and even likely. Ethereum could assist us in assessing the size and scope of this potential trap. Therefore, if we see that this structure falls into a trap zone, the first thing we'll do is look at what Ethereum is doing. This will allow us to measure the magnitude of this potential trap. But of course, what exactly will we need to observe? After the formation of the trap, if this trap actually develops, pay attention to what happens next. The key point after the trap is the test. The price needs to recover the structure, give us a test, and then continue its movement. So what are we seeing on this last day of the year? We're at a critical point, but there's still a bit of room for the price to drop without entering into a bearish process. While we're expecting the price to continue upward, it's possible for it to fall slightly. In Bitcoin's case, this could mean entering a trap zone. However, it'll be crucial to closely monitor this trap and observe how the price recovers. What will be essential here is watching for the re-entry and test of the zone. If you enjoyed this advanced technical analysis, let me know in the comments. Also, don't forget to like the video, subscribe to the channel, and click the bell icon so you don't miss future analysis. Share this video with your friends and other trading and cryptocurrency communities so more people can improve their trading strategies. Good luck with your positions, and until next time, have an excellent start to the new year.